Good morning. And today is Wednesday, March 24th, 2021. Welcome to our Board of Supervisors sitting as the County Board of Equalization. This is an assessment appeal hearing. It was posted and final. The attendances of this meeting is closed to the public per the governor's executive order. The public may join this meeting by Zoom. Can we have the Pledge of Allegiance held by Supervisor Tiffany?
I pledge allegiance to the flag
of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Just for transparency purposes, there is one supervisor, Peter Hernandez, who is on via Zoom. The other four supervisors are present and in person in this building here. Can we have the acknowledgement certificate of posting, please?
So moved, Mr. Chair.
Is there a second?
Second.
Got a first, we got a second. All in favor?
Aye.
Aye.
5-0, motion passes. Let's go to the notice of temporary procedures for the Board of Equalization meetings. Madam Clerk, or Assistant Clerk?
Good morning, Chairman. Good morning, Board. Good morning, community members. If you'd like to make a comment.
Speaker? Is
We
your
can't
speaker
hear
on?
Is it on? You can't hear me?
No.
Oh.
Bring the mic
Okay.
closer to you.
Good morning, Chairman. Good morning, Board. Good morning, community members. If you'd like to make a comment, you can press *9 or the raise hand icon on your screen on Zoom. Thank you.
Okay. Our assessor, Tom Slavich, is at the podium right now. We'll go into our regular agenda. We will be looking at applicant John C. Chang from Chevron.
Good morning,
Mr. Slavich?
Yeah, good morning, Mr. Chair, members of the board. First applicant, John Chang from Chevron. This is the Chevron gas station across from Safeway. The application number is A439. The applicant nephew has signed the withdrawal form for his uncle. The nephew actually, David Doan, and David Doan actually runs the Chevron station there for his uncle. And so we recommend you accept the withdrawal, but also deny the appeal due to lack of appearance by the applicant.
Okay, we'll bring it back to the board. What's the wish of any questions from the board? What's the wish of the board?
I move that we accept the withdrawal.
Is there a second?
And do we need to accept the withdrawal and
Deny.
And deny the appeal due to lack of appearance by the
Thank you.
applicant.
Friendly amendment. I move to accept the
you.
withdrawal and then to deny the appeal.
second?
There's a second. What's the wish of the board?
And just for the record, they're not present in person or on Zoom.
Oh, and they are not
I'm just
in
confirming with the
person
clerk of the
or
board.
on Zoom.
Clerk, can you confirm that that they're not present on Zoom as well?
Is a applicant John C. Jang on or anyone representing this individual on Zoom?
Okay.
No, we have, for the record, there is no one on Zoom or in the quarters here. We had a first, we had a second. All in favor?
Aye.
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 Peter? One more time, Peter?
Aye, Mr. Chair.
That's
Aye, Mr. Chair.
5-0. Motion passes. The second one is applicant White Wave Food, Natural Selection Foods, Earthbound Farms. Go ahead, Mr. Slavich.
Yes, Mr. Chair. On this particular one, in the pack, there's also some withdrawals, which I'll kind of go over besides the extensions. The Earthbound also appealed on several years, 2019 and 20, on 2 real property parcels. They went ahead and actually withdrew those appeals, so I just wanted to make that point. Regarding their request for continuance, it's regarding the unsecured account 850-00524, and it pertains to the personal property assessments, and we're going to be working with them through audit to try to resolve this issue. So basically, we have no issues with the extension requested. Our recommendation is you accept the requested continuance and have the chair sign the extension of time request.
Is anyone from White Wave Foods, Natural Selection Foods, Earthbound on the Zoom call or in the quarters here? And you're saying to go ahead and,
Grant the
Grant?
continuance.
okay, what's,
Is that contingent upon them signing any sort of waiver of time, or have they done it for all the applications?
They've already done the waiver of time in all those prior years.
Okay.
And they're aware of this, and they want to resolve this thing, so we're going to be working with them.
what's the wish of the board?
I'll make a motion that we accept the continuance.
Is there a second?
Second.
All in favor?
Aye.
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 5-0, motion passes. We'll go to number 3, the Barberia Mario Trust.
Yes, this is the, actually, this is the Walgreens property there, the new Walgreens property next to the Chevron across from Safeway. And in this particular situation, there's 3 appeals, 3 different years. The applicant has requested an extension. We have no issues with that extension, so we recommend you accept the continuance and have the chair sign the extension of time request.
Are the applicants either on Zoom or in the quarters here? Can you bring it back to the board? What's the wish of the board?
I'll move that we accept the continuance and authorize the chair to sign the extension.
Do we have a second?
Second.
All in favor?
Aye.
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 5-0, motion passes. We'll go to number 4, applicant Northwest Packaging Company.
Yes, this is our local cannery, and in this situation, the agent has requested an extension, and we have no issues with that continuance, and we recommend you accept the requested continuance and have the chair sign the extension of time request.
Is the applicant on Zoom or in the quarters here? See none, we'll bring it back to the board. What's the wish of the board?
I'll make a motion that we accept the continuance and direct the chair to sign the extension.
Do we have a second?
Second?
Second, Mr. Chair.
We'll give it to Peter. Peter has a second. All in favor?
Aye.
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 5-0, motion passes. Number 5, the applicant is the American Tower LLC, site number 41714.
Yes, in this situation, the taxpayer has also requested a continuance. We have no issues with that continuance. We recommend that you accept the requested continuance and have the chair sign the extension of time request.
Is the applicant out in the quarters here or on Zoom? See none, we'll bring it back to the board. What is the wish of the board?
I'll move that we accept the continuance and authorize the chair to sign the extension request.
Do we have a second?
Second.
We have a second. All in favor?
Aye.
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 5-0, motion passes. We're go to number 6. The applicant is Lowe's
Yes.
HIW Incorporated.
Yes, this is a vacant parcel here in town. The applicant requested a continuance. Again, our recommendation is you accept the requested continuance and have the chair sign the extension of time request.
Is the applicant in the quarters or on Zoom? See none, we'll bring it back to the board. What is the wish of the board?
I'll make a motion that we accept the continuance and direct the chair to sign the extension.
Do we have a second?
Second.
All in favor?
Aye.
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 5-0, motion passes. Number 7, the applicant is Rayleigh's Family of Stores, Siri Rev TR.
Yes, this is our local Nob Hill store. The applicants requested a continuance. We recommend you accept the requested continuance and have the chair sign the extension, the time request.
Is the applicant on Zoom or in the quarters here? Seeing none, we'll bring it back to the board. What's the wish of the board?
I'll move that we accept the continuance and authorize the chair to sign the extension request.
Do we have a second?
Second.
All in favor?
Aye.
Aye.
5-0, motion passes. We are down to our last one, number 8. The applicant, Peninsula Packaging LLC.
Yes,
Yeah.
this is unsecured account 850-00525. The property location is 2401 Burt Drive. The appeal application number is A433. The actual assessment year is 218, and this is a valuation date of property as of January 1st, 2018. That's the assessment date.
Okay, and the individual here is in front of us in the quarters here. Just to give a little bit of the instructions, the commencement of hearing. At the commencement of the hearing, we have already announced that this is the applicant, Peninsula Packaging LLC. What we'll do is the clerk will announce the applicant.
Good morning, Chair and members of the board. The applicant today is Peninsula Packaging. For all of you that will be testifying on these matters, please stand and raise your right hand. If you could please state your name for the record.
Jason Morris. Eric Bailey.
Do you solemnly state under a penalty of perjury that the evidence that you shall give in this issue or matter shall be the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
So in this,
Oh.
do you want to continue?
Yeah, I just will, what I'll say is that I will, what we'll do is the presentation of the evidence will be provided by the applicant's agent. And then after that, we will have our assessor being able to say their part. We'll go back to the applicant, and then at any point in time, if the board members have any questions, please chime in. This is, to me, I'll do it a little bit different. I'd rather catch them when their questions are there rather than at the very end and writing everything down. That's just kind of the way I do things, just a little bit easier than remembering everything. So from here, I will give it over to our assessor, Tom Slavich.
Great, thank you, Mr. Chair. So in this situation, I just wanted to go a little bit over the valuation. The assessor's valuation, total valuation for this property was $17.3 million, roughly. The applicant's opinion of value is roughly $5.9 million. The breakdown includes structural improvements, tenant improvements, fixtures, and personal property. And I believe the main issue here is the personal property, I believe.
That is correct.
So just for some clarification, 17 million was the evaluation.
17.3 million was the assessor, was the evaluation on that.
5 million was their assumption.
Yes.
Therefore, the difference is roughly, in round numbers, about $12 million.
Well, the personal property was if you break it down, just personal property, it's 15.4, and their opinion of value just on personal property is 5 million.
Okay, so that's a difference of roughly 10 million.
Correct.
Okay, thank you.
We have a slightly amended opinion of value, but I can get into that when I testify.
Okay, I just wanted to
Yes,
kind of outline what we're looking at. Not, we're not speaking of $50. We're speaking of, a pretty large amount.
Yes, sir.
Yeah, I'm
Thank
just going over the application,
Yes.
what was filed, so.
Thank you.
I just don't want there to be any confusion.
Oh, no, not at all, sir. Thank you.
Okay. So in this case, the applicant has the burden of proof, and will be presenting first, and that Mr. Jason Morris, tax agent representing Peninsula Package, will be presenting, so. Jason?
Thank you. First, I'd like to thank the board and everyone here for being here today. I know it's a tough time to handle these things. I'd like to just, I'll do my best to be brief and try to make this informative. The property in question is what's called a thermoforming plant. You actually have quite a few of them up here in San Benito. Essentially, it's a plastics plant. It creates the outer shell of the product you see here. Top piece, bottom piece. It's just pressing plastic and selling those.
So are those what we refer to sometimes as clamshells?
Yes, sir.
Okay.
Correct. So the applicant requests the board consider an obsolescence adjustment for machinery and equipment and process fixtures on the subject property. The subject property is located at 2401 Burt Avenue and produce agricultural plastics for the fruit and vegetable packaging industry. The taxpayer asked the board to consider an obsolescence allowance calculated using the plant's excess operating costs. This methodology is prescribed by the American Society of Appraisers in their textbook named Appraising Machinery and Equipment, and is also seconded by the California State Board of Equalization in Letter to Assessor 2010-30, which deals with calculating obsolescence in personal property. The taxpayer is advocating this approach because the reason, let me add this, the facility closed in September of 2018 due to lower demand for their product. There was a capacity issue, and the organization had two plants making the exact same product, one up in Yakima, Washington, and one here in Hollister. So they combined the production into one of the facilities. The taxpayer is advocating for the approach that we talked about, the excess operating cost approach, because this is the reason why the plant closed. The owner looked at the cost to produce the product in Yakima versus here in Hollister, and unfortunately the Yakima plant, being a newer plant, had just a lower cost to produce. And since both plants were running at about 60 to 70%, they weren't making enough money to be operated separately, so it made sense to move the production orders from Yakima, or from Hollister to Yakima, and shut down the Hollister plant. And that's what happened. When we examine the facts of this case and the BOE comments regarding how to apply this appraisal technique, I believe it becomes clear that this approach is relevant and should be utilized. So I'd like to pass out my exhibits, if I could.
Thank you, sir.
Could you see whether the clerks would scan one to Peter?
I'll do it right now.
I'll get it.
Okay.
Hey, Mark, 8. Was I supposed to bring 9? Apologize for that.
Do we need extra copies? Sorry, was there a need for extra copies? Okay. How many more? 2? 3? Does the clerk of the board have 1 too? 4? Thank you very much.
You know, I hate to get ahead of you, but I know since we have a little bit of time, just real quickly here, is the equipment itself, that's what we're talking about, the equipment, correct?
Yes, sir.
Where is it right now?
Some of it was disposed of when the plant closed, and the remaining portion was transferred into storage and at the Exeter facility in Tulare County.
Okay. And what was the age of the equipment?
The age varied between, I believe, 3 and 10 years.
So was any of the equipment fully depreciated?
Well, we don't fully depreciate personal property. There's always a floor value. So it would be hard to say that just from, my answering it right now. I could look through the.
Yeah, but you're saying that some of the equipment could have been 3 years old.
Could've
So,
been
but
what?
the
I'm sorry.
equipment could still be used again?
Yes, sir. That is possible. Now, I would like to talk about that.
Yeah, I was just, I mean, I know we have some time, fill time, so
Yeah.
I was just
Yeah,
questioning.
I could speak to that. This is manufacturing equipment.
Yeah, so none of the stuff went to Yakima,
No.
None at all.
The orders went to Yakima.
but none of the equipment at all?
Correct. There was already sufficient capacity in Yakima to fill the orders. And I would like to speak on compatibility of manufacturing equipment. It's something that's relevant in this case. A lot of manufacturing lines today are very technologically designed, and you can't just plug in certain pieces of machinery into them. They're designed from the ground up.
Yes.
And it's just not, so, you might say, oh, well, we transferred them to Tulare County. That may be the case, but can you get any useful, economic value out of them? It's hard to say because you don't know whether that equipment is going to be compatible with the lines they have there. And it's something that we run into a lot. I'm just pointing out that this type of equipment is not.
Yeah, so they're
it's not a sofa. It's not a
So in
TV.
Tulare, they're just in storage, they're not being used?
Exactly. Yeah, they're kind of there for extra components. Should there be a need, we're probably going to have an appeal in Tulare County about the fact that those are idle assets and not being
So they're
utilized.
basically a boneyard, what I refer to as a boneyard. You use some of the parts and pieces to supplement what other line you have.
I would not. I suppose so. Yeah. I don't know if I'd go as far as a boneyard because boneyards usually you see a boneyard there. It's kind of scrap. These are newer pieces of equipment, so they would be utilized where they could, but right now they're just in storage.
But you said they're not compatible, so.
What I was saying is it's a situation where any manufacturing line has very specific tolerances to
Yes.
manufacturing, and when you have a certain piece of equipment, you can't necessarily say, well, we'll just hold on to that and plug it in there. If you ask a plant manager, do you want this equipment? They're going to say, of course I do. It's free equipment. I'll take it. But the idea that we can just plug it in there, kind of just say, well, we'll just move it over to Tulare and we'll use it there. It's not quite that simple. Now, I think the truth falls in between the two. I think
Okay,
there's
that's-
boneyard and then there's utilization, but you're not going to get the utilization you're going to get of that equipment had you designed the usage from the ground up. That's really what I'm getting at.
Excuse me, one follow-up question. Again, I may be getting ahead of things here, but you mentioned that the equipment in the Hollister plant was 3 to 10 years old. How does that compare in age with the equipment at the Yakima plant, which you say is a more efficient plant?
It's more efficient in many different ways. As you may know, the Hollister plant goes back to the early 80s. The Yakima plant was designed in the mid-2000s. And there's certain things that, in terms of manufacturing layouts, that are more efficient, that give that plant a competitive advantage over a Hollister plant that has, it's 40 years old. It's not designed. The workflow isn't as efficient. There's also going to be issues in terms of labor costs and freight costs that are going to be less in rural Washington than you would have in California. Those are forms of external obsolescence that we think are relevant. Ultimately, it comes down to this case really does come down to the plant is in Hollister could produce cases at $28 per case, and the plant in Yakima could produce it at $20 a case. And essentially both plants are running at like 60% capacity. So the owner said, well, we can't make money running both the plants at 60%. They basically make the same thing. Let's move the orders up to Yakima. we'll close Hollister, and then we'll just move the remaining assets over to Larry. Hopefully, maybe we can use them, maybe we can't. It's something that's just happened a couple years ago. But I can't speak to the age of the equipment versus the age of the equipment at Hollister, because it's not, we're talking about multiple items, and they're all going to have different
So the
vintages.
greater efficiency of Yakima is more in terms of location and newer plant and design as opposed to newer equipment in versus the Hollister equipment.
I think that would be an accurate description, yes, sir.
Okay,
Just
thank
to
you.
give you a comparison, Mr. Tiffany, it's similar to Milgard windows. Milgard windows, they left here in the
10 years ago, maybe?
10 years ago, and it wasn't because of anything, but I worked at the Milgard at that time. We had extra capacity in Sacramento, so what we did is we shut down the plant here in Hollister and took some of the capacity, gave it to Sacramento, and gave some to Simi Valley. So it's the
Yeah,
right,
no,
unfortunately, in sitting here as a county representative, it's not good, but
Of course,
as a
sir.
business person, it's good because if you're at 60% capacity, 60 plus 60 is 120, and if you're more efficient at Yakima, and the labor costs, we all know, cost of doing business out of state is less expensive, but it's the right thing to do. But we're just here with the sales tax, looking at our property tax. But
Yes, sir. It's unfortunate, obviously. It's not something that the taxpayer wants to do.
yeah, is that right if we proceed, Barbara? Okay.
Yeah, I think so.
Sorry about that.
Is that okay with us proceeding, or do you need to actually have, I don't know whether they've managed to scan the, well, I mean,
All the board members are here.
I know, but if they're going to be referring to exhibits, I think the assessor's office and Peter should have the exhibits in front of them. Supervisor Hernandez, I'm sorry.
Well, I think Laura has an exhibit, correct? Is that all right, Laura? Can we start?
So I think it's okay to ask questions, but when we get making this
Yes.
presentation, we need to have this exhibit.
Okay. Well, Tom could have my exhibit, and I'll share it with one of the supervisors.
Does Peter have his exhibit?
Yes, Peter has. Can you share with Laura real quick, sir? That way we can get going. We're gonna have 3 feet.
We'll have this be the,
Okay, you can start, sir.
Okay, thank you, sir. So I would like to go to applicant's Exhibit B, which is hopefully right here. Okay, here we go. And there's a blue tab.
yes.
For those that don't have the blue tab on the copies, it's page 18. So what we have here, this is an abridged copy of LTA 2010-30 from the State Board of Equalization to the county assessors, and it is a calculation. When I say abridged, I simply cut out the component. It's a 100-page document. I didn't want to waste printouts, so I just printed out the relevant section. So what we have here is what's called excess operating expenses.
I'm sorry, could you state which page it was?
It is
18.
page
1-8.
But
18.
But mine skips from 16 to 23.
16 to 23. Is it double-sided?
No, you're on Exhibit B.
Oh, Exhibit B. I'm sorry, ma'am.
Oh, I'm sorry. Thank you. Thank you.
Yeah, I didn't want to kill a bunch of trees, just for the one page. It's in the second exhibit, sir?
It's the letter.
Yeah. Okay, so I'll just read from the section here. Excess operating expenses. Functional obsolescence may also be caused by excess operating expenses. In some cases, the replacement equipment not only has less acquisition costs, but also may be expensive to operate. In other words, operation efficiencies of equipment may result from excess operating costs, labor, materials, overhead, the kind of things we're talking about. So the State Board of Equalization lays out a calculation to make this excess operating cost allowance. And that's right there. It starts with the A. So what you do is you take operating expense per unit for the subject property. You take the operating expense per unit for the replacement property, and you subtract the two. And the difference is the excess operating cost per unit. I'll go through this in my presentation with the actual numbers, but I just want to go through it here now. So then you take the number of units you produced that year and you multiply it by that difference. And that will give you what's called excess operating expense. So that's the added expense you incurred by producing the property at the higher unit cost. Item E is income tax on incremental income. As you know, a business expense such as manufacturing costs is tax deductible, so you wouldn't be able to take that entire amount as a penalty against the value. You have to take off an allowance for income tax because it would be deductible. You get that back in your income taxes. G, the remaining economic life of the subject, and then the net present value. So your operating expenses, the annual operating expenses reduced by income tax times the applicable present value of the annuity. So the American Society of Appraisers also identify situations where functional obsolescence may be found. Examples are plants involved in the process industry, plants involved in industries that either use assets or manufacture products with a high degree of technology, older plants that have increased in size over time, and plants in which there is identical units being produced. So the applicant looks at this and says, this is exactly why the plant closed. It's unfortunate, but the unit cost is exactly why the Hollister plant closed. So we feel this is a relevant way to calculate loss in value. So we're going to be done with this one unless the assessor calls it. And if I could go to Exhibit A. And we're going to start on page, actually, I'm going to go over the salient facts real quick. Page 3. This is just kind of a summary. So the facility was acquired in a merger with Sunoco Plastics in early 2017. That merger included 3 other plants that Peninsula Packaging owned at the time, the Yakima plant, as mentioned, the Exeter plant over in Tulare County, and then a plant in Guadalajara, Mexico. The facility produced agricultural plastic containers for fresh produce. The subject closed in September 2018. Production orders were moved to the sister plant in Yakima, Washington, due to lower production costs per unit. The valuation issues that we feel are relevant in this case, we have 2 actually, but we're only going to proceed with 1. Speaking with the assessor and kind of talking over some of the comments they made, we felt like we're only going to using 1 approach would be the way to best quantify this. So we're going to ask the board to consider the excess operating cost analysis. So the taxable value of the property, the taxpayer's new opinion of value under that approach is $7.9 million for the property as of 2018. So I'd ask you to go to page 7, which is where the excess operating cost analysis starts. So we've kind of already gone over this, but as you can see right in the center, there's a Excel box that shows you the production costs per unit, number of units produced, the cost of goods sold. Divide those 2, gives you the cost per case. So below that box, we see the State Board Equalization's formula. So we've got operating expense per unit for the subject property of $29.50 per case. Operating expense per unit for the replacement property, $20.60. The difference in the operating expense is $8.90 per case. Annual operating expenses, they produced, Hollister produced in 2007, the calendar year 2017, 949,946 cases. You multiply that by the $8 to come up with $8,453,751. We then calculate the income tax write-off for the excess operating costs. We're estimating 25%. Corporate taxes in America are right around 17%, but we're going to go with 25% in this case to be conservative. Going on to the next page. The remaining economic life of the subject is 1 year, so the present value part doesn't really have any effect. So the next table you see there, so we have 949 units, or 949,949 units at $8.90 gives you 452, 751. Take out the 2,113,118 for the income tax deduction, which gives you an obsolescence penalty of 6,339,564, 563.
Can I interrupt you real quick?
Of course.
Sorry to.
I'm probably going way too fast. I apologize.
No. Just a question. When I'm looking at Hollister from 2017 to 2018, your cases decreased, but your COG increased.
Yes, sir. The plan.
Now, in your COG, explain to everyone what's in your cost of goods sold. It's not just your material, but it is
Correct. It's
labor. It could be bonuses. It could be a lot of different things. So you can put more money in your COG to increase the cost per case if you wanted to.
If you want to, I mean,
Well, because bonuses are in there, and so are payouts and everything else in your cost of goods sold.
yes, sir. But
Okay.
they would also be in the Yakima plan as well.
Well, if it depends what you're looking at. So what I'm trying to say is that when you're looking at your COG,
Yeah,
the materials predominantly they're about the same. The actual, when I'm saying cost of goods sold, take out labor. I'm just speaking of raw material needed in order to make those clamshells.
Yep.
They're pretty much the same amount. The only difference would be freight.
Freight and labor. Labor would be.
Well, I'm not saying
I'm
labor right now because I can't see that increase of cost just on labor.
Are you're talking about from 2017 to 2018?
Oh, yeah.
Yeah, I think the answer to
That was acquisition cost too, right?
Well, Hollister closed, so there were closing costs that.
But you
were,
bought, yeah, so the closing costs are included in this.
Right, and we are not using the 47.
Yeah.
We are using the 2950, and the proper way, based on the state board, is to use the data
The lowest, yeah.
from the subsequent year. Yes.
Okay.
So we're using calendar year
2018.
2017 for the 2018 lien date,
Okay.
and calendar year 2017 for the 2018 lien date for both properties.
Okay, thank you.
Okay, so the taxpayer requests the board enroll. So if we take the 2018 roll value of $14,235,301, and we reduce by the functional obsolescence excess operating costs of $6.3 million, we come up with a value of $7,895,738.
Excuse me, can you tell us what page you're referring to?
Oh, I'm sorry, ma'am. 2009. 2009. Page number 9. It's the summary. It's the bottom table. Originally, we had 2 approaches, so there's 2 tables there. We're only going to proceed under the second approach after discussing with the assessor.
No, I see the or.
So if we're on page 9, you should see $14,235,000 as the 2018 roll value. Sorry, my eyes are-
Excuse me, I do have a question here.
Yes, sir.
At the very beginning, I guess, Tom, you said that you were looking at 17.3 assessed value, 15 million, which was personal property, and then, 5 million was their opinion. But we're looking at 14,235. I'm sorry. Sorry. In the beginning, we said that there was a 17.3 million assessed value, 15 of which was the personal property, and I thought I heard 5 million was their opinion.
Yes,
How does that compare with this 14,235 versus the?
Yeah, I'm not sure where he gets the 14,235.
The
The actual
7.9.
personal property,
I can add to that, sir. I believe there's a 10% later non-file penalty on the filing, and I think that's been added in there. Yeah.
yes, so, but the total personal property, including that, is 15,497,001.
Right, including the penalty. We have the county's assessment detail in one of the appendixes, and if you check on page 31 of this, you'll see 14,235,301 as the roll value, which would be the actual value of the equipment, excluding the penalty, which wouldn't be relevant to the value. It's simply added on.
The penalty would remain.
Okay, so the difference between the 5 million we heard in the beginning and the 7.9, is that tied into the penalty as well, or is that something else?
No, that's not tied into the penalty. The penalty is over and above.
Yeah, the penalty's added.
Okay.
I believe it would be reduced, should the
So
board
it's,
reduce it, it would be
10%.
reduced.
so you're saying, maybe I'm getting ahead of things, but you're saying it's, your opinion is 7.9, it's not 5?
Correct, sir. Yes, sir.
Okay, okay, that's what I was trying to get at. Okay, thank you.
That would conclude my presentation.
Thank you, sir. Now, at this point in time, we'll ask Tom and his staff to present their side.
Sorry, there's a time for clarifying questions, I believe. Was there not for the assessor to ask questions of the applicant?
If we can maybe,
The-
we could do it now, or we could do it after we present and rebut back and forth.
Okay, that's fine. Is that,
I don't, unless the
Yeah, I would
staff,
stipulate to that.
Are you right,
At the
you're right with that, sir?
At the assessor's pleasure.
Okay.
unless the staff has any questions. Basically asking questions now or waiting till after both sides present.
We're good.
We can just wait
We're-
unless
we're
unless you have some questions now that are pressing.
No, we're good.
And the board asked questions as they were going along. That's why I tried to do it that way, but,
Yes.
yeah, so you're fine with that, sir?
I am, sir. Yes.
Okay, go ahead, Tom.
Okay, very good.
And staff.
So, presenting for the assessor's office, I have Laura Nacarado, my assistant assessor. Laura's been with the office for over 14 years, and she has a bachelor's in accounting. She has her advanced appraisal certificate, and she's experienced in all types of appraisal. And also assisting Laura is Eric Bailey, appraiser 3 for the office. He is the retired assistant assessor from Monterey County Assessor's Office with over 35 years of experience. He's been with our office working on special projects for over 7 years. Eric also has his advanced appraisal certificate as well, and he's extremely knowledgeable on all aspects of appraisal. So I'll let them go ahead and present.
Okay, sure. Okay, one for- oh, you have one? Do you have
Thank you.
After our, yeah, it's a little updated. Okay, so in your packets, you'll see, is the mic on?
Speaking to the mic, please.
In your packets, you'll see the presentation, and then there's also a packet for the exhibit, so you're not having to flip back and forth through the whole thing. Good morning, Chair and members of the board. First, we're going to go into a little bit of history with the company. Peninsula Packaging specializes in making preformed containers to contain fruit and vegetables for growers throughout the United States. They purchased the company in 2011 from Packaging Plus, LLC, through a series of transfers. Berkeley Operations, LLC, was the legal owner of Packaging Plus. This entity had 4 locations, Hollister, 2 in La Mirada, and a plant in Yakima. Berkeley Operations, LLC, created Ag Thermoforming and transferred all assets from the 4 plants to this entity. Ag Thermoforming was then sold to Packaging Holdings Incorporated, and in December 2011, these assets were moved to a subsidiary called Peninsula Packaging, with a single member owner of Packaging Holdings Incorporated. Packaging Holdings Incorporated purchased the assets for roughly $54 million. Personal property and fixtures were valued at that time at $16 million. And your first exhibit, A, is just a breakdown of those assets per plant at that time. And this was gathered from a 2014 audit that was conducted by our office. So at that time that we did the audit in 2014, a tour of the facility was also done during the audit process with myself, the assistant assessor at the time, Cheryl Tyler, and Sean Morrison, who is now our chief appraiser. There was no mention, nor did we observe any concerns of functional or economic obsolescence at that time. The company was then acquired by Sunoco in 2017. Along with the Hollister plant, there were 3 U.S. plants acquired, with another California plant located in Exeter and 1 plant in Mexico. This acquisition totaled over $218 million. In September of 2018, they made the announcement that the Hollister plant would be closing and did so by the end of 2018. So as stated before, the year under appeal is 2018. It is the duty of the assessor to assess personal property at fair market value as of the lien date, which for consideration of this appeal would be January 1st, 2018. The applicant is appealing the personal property value of the equipment, even though on his application he indicated his opinion of value for leasehold improvements should also be reduced by 50%, which was just an arbitrary number. But I think we clarified that he's only arguing the personal property value today. The cost approach is the most frequently used method of valuation of personal property and fixtures for assessment purposes because it lends itself to mass appraisal and is employed based on information provided on the yearly property statements. And that is per California State Board of Equalization's Assessor's Handbook, Section 504, page 50, and I also included that in your exhibit packet. Our 2018 assessment is based on the information which was provided on the 2017 business property statement because there was no 2018 statement filed with our office. We carried over the 2017 information, placed a small estimate for possible acquisitions due to the non-file, and applied a 15-year life on the production equipment, which is standard in this industry and recommended by the Board of Equalization, as you'll see in your next exhibit, LTA, Letter to Assessor, 2008-56. There was also a 10% penalty which was incurred due to not filing that 2018 571L. So in that exhibit, these are the state recommendations for tables. You'll see it's a recommended 15-year life on the industrial table, and that's what we propose to use. Unlike real property, personal property is not governed by the base year value limitations under Prop 13. The annual lien date value of personal property is typically derived from using the cost approach and applying the factor tables issued by the State Board of Equalization in the Assessor's Handbook 581. From the reporting on the property statement, the taxpayer indicates if the equipment is machinery and equipment, computers, tools, office furniture and equipment, etc. And using this data, the assessor then categorizes the equipment into the appropriate classifications according to the BOE's published tables for proper equipment life to be used for depreciation. The applicant is claiming the equipment suffers from two forms of additional obsolescence. Well, actually today he's not claiming economic obsolescence any longer, just the functional obsolescence. The next two pages are from his original presentation that he provided us, including that economic obsolescence adjustment. So I don't think we need to go into that. So if you would like to move on to page 7, again, it's just taken right from his presentation, page 7 and 8. It's his calculations. So the assessor's office does not agree with the applicant's assertion of obsolescence due to excess operating costs, and we will illustrate our position on the following pages.
Excuse me, Laura, I think we should look at on page 6, the assessor's observation. And we're looking at the history.
What's page 6, sir?
Page 6 of Laura's.
Thank you, sir.
And we're looking at the assessor's observations, and we're looking at the history of cases produced. And this plant has been operating, and normally a industrial plant will operate about 80% typically. They never operate, well, not for a long period of time at 100%. And this plant, prior to the sale, was operating at what we consider to be a normal operating capacity. And it didn't drop in operating capacity until it was purchased. And so in 2017 it was purchased. And they closed it very, not far from the time that they purchased it. So, we're looking at, it was operating normally. And they closed it right after they purchased it. So you can't look at 2017 as being a typical year of operation. They made a business decision to close this plant and started closing it down. So before the purchase, before Sonico, it was operating at normal capacity.
Yes, sir. We're going to let the individual jump in real quick.
Yes, I would just have a point of clarification. The assessor testified that this was a purchase of the plant. This is a merger, the two plants.
Okay, a merger.
Yeah.
That's fine. For the record, it was a merger.
It was not a sale, so you're not purchasing the plant.
But you still can't, there is a large decrease in the production. So it went from 79% to 60%.
Yeah, I would not disagree with
Okay,
that.
thank you.
Well, to be clear, there was a change of ownership of an entity.
Okay. Change of ownership, merger. Okay. Go ahead. Thank you, sir.
Okay, go ahead.
It's just a recap of his
You
presentation.
stopped at the bottom of page 8.
Okay,
Yes.
we're going to go to page 9 because 7 and 8 is just his
Reiteration.
presentation. Okay. So I'd like to talk a little bit about comparing operating costs. I would like to point out that the applicant is using data from the Yakima plant as a comparable to the Hollister plant. When comparing operating costs of the replacement property to the subject, the applicant must use a comparable that has similar labor, material, and overhead costs. The applicant has not done this. It is impossible to compare operating costs in another state to California because there are significantly different direct and indirect costs of manufacturing and local regulations. Yakima has much lower energy, labor, and overhead costs. We were wondering why the plant in Exeter was not used as a more realistic comparable. Moving out of state to take advantage of less expensive operating costs is not indicative of excess operating costs due to the machinery. If there is excess operating costs, the applicant has not identified what characteristics of the machinery is causing that obsolescence. BOE's factors are used to calculate replacement cost new, less normal depreciation on a mass appraisal basis, and the appraiser's definition of normal depreciation is normal loss of value from any cause. It is our position that the depreciation tables developed by the State Board of Equalization adequately measure the loss of value due to depreciation. As defined in the AH 504, the Assessor's Handbook, functional obsolescence is due to the design of the equipment itself. No reliable information has been provided by the applicant to indicate additional obsolescence as outlined in LTA 2010-30. During our field visit to the plant to conduct a recent audit, our staff did not observe any additional obsolescence, nor was it brought to our attention by any of the plant managers at that time. The applicant assumes in his presentation that the equipment was scrapped when the plant closed and therefore has no remaining economic life, but this argument is contrary to the known facts. In Revenue and Taxation Code Section 441D request, I asked the applicant what happened to the equipment from the Hollister plant. At that time, his response was, according to the taxpayer, a few items were moved to Exeter and the rest was scrapped. He also stated he would check with Exeter to see what they received, but that information was never provided. Again, there is no verifiable evidence being presented to validate the applicant's statement. In fact, we have information from Sunoco to Tulare County that the personal property and equipment was largely moved to the Exeter plant. And in your exhibits, you'll see the 571L from Sunoco that was filed with Tulare County. And on page 3 of that, in the remarks section, they clearly state that many of the assets were moved to that plant. Clearly, this tells us that the equipment is not worth merely a scrap value, which the applicant is claiming. And why was the business property statement for 2018 not filed in San Benito? If the equipment was being scrapped or transferred out of the county, this statement would have told us that and detailed what happened to the equipment. Based upon a history of acquisitions at that Hollister plant, there were recent acquisitions up until Sunoco stopped reporting in 2018, and it is highly unlikely that this recently acquired equipment would have been scrapped. According to what we know, the equipment was not scrapped, and there is no indication that the plant suffered from any additional obsolescence.
Can I let the applicant say a word real quick? Is that all right with you, Laura?
Yep.
Go ahead, sir.
Thank you, sir. So a couple comments there. The assessor states that we're looking for scrap value. We're looking for an $8 million value on a $15 million assessment. That is not scrap value. Scrap value is generally considered in the personal property world to be about 10%, 5 to 10%. So we're certainly not asking for scrap value. Now there were some.
Well, in your application, however, your opinion of value was 5.1.
Yeah, that's true, but we are not held to that value, and oftentimes, when you're filing appeals, you're required to put a number down. You have not had a chance to go through and do proper analysis to actually come up with the proper value, and I think that's very common.
So wait a minute, you're asking for additional depreciation due to functional obsolescence?
We're fine with this, Barbara. We're fine with this, Barbara. I talked to Tom. We're fine going back and forth this way. Tom said it was all right also. Is that all right with you, the way we're doing?
Yes, sir.
Okay.
We'd like to.
As long as everybody's in agreement, I think we're fine.
I'm making the point that you're taking additional depreciation of values that are already depreciated. So if you want to measure the total depreciation, you have to go back to the replacement cost new, take what depreciation from what the assessor is using as normal depreciation, and then you're adding to that. So it's a much lower value than what you're stating.
That's correct, but it is not scrap value, and that is the approach that the State Board of Equalization advocates for. You do use depreciated cost and apply the inutility or excess operating cost penalties to that value. The idea is it's additive. Physical depreciation, which is what you're talking about now, economic obsolescence, functional obsolescence, technological obsolescence, they can all be additive, and that's very well documented.
Well, the value that you stated is now going to be much lower if you take it off the RCN, and it's going to be close to a scrap value.
No, we're talking about a $15 million value. We're going to $8 million.
$15 million value that's already been.
I see what you're saying. Okay, so
It's already been depreciated.
it has been depreciated. It's still not a scrap value. But,
Okay, well, let's proceed.
Okay, and then I think ultimately this case comes down to the difference between Hollister and Yakima. I think we can all see that. And
Okay.
the functional obsolescence.
Excuse me, at this point.
Maybe I should let
I think you're going into another presentation.
Yeah, I apologize.
And I think we should ask questions after the presentation.
That's fine, Tom. Whatever you're comfortable with, Tom. Go ahead, Laura.
Can I just ask a question? Why
Sure
was
can.
the Yakima plant used as a comparison as opposed to the one in Exeter?
Ma'am, the Yakima plant was used because that is where the orders were actually moved to. That would make more sense. If I were to make a comparison between Exeter and Hollister, but the orders went to Yakima.
What does Exeter do?
Exeter does a little bit more general work. They do this type of work. But
But
also
do they
other
do
things.
identical units as the ones that Hollister was?
Not so much. It's a bigger plant, so they do more.
But do they do the same units? Okay, let's just say there's 100% capacity. Or in this gentleman's 80% is normal operating in this type of industry.
Yep.
What percentage of that is the same type of output as Hollister?
I couldn't speak to that.
But is there same identical units being made there?
I believe there are.
Okay, thank you.
I
That's
would
what you
also
were
add.
asking.
Well,
Thank you. Go ahead, Laura.
Thank you.
That's what you're asking.
So in summary, all additional functional or economic obsolescence must be supported by reliable and verifiable evidence. The applicant must provide data that would show a viable quantitative analysis of factors like reproduction versus replacement cost and technological disadvantages or inefficiencies. And as stated in the BOE's LTA 2010-30, which is the guidelines for substantiating additional obsolescence for personal property and fixtures on page 9, the preferred method of obtaining such is the market approach when reliable data is available because it captures all forms of depreciation, including external and functional obsolescence. Examples of market data would be things such as market studies or price listings and used equipment price guides. Data such as this was not provided by the applicant. Functional obsolescence is the loss of value in a property caused by the design of the property itself. For example, when the capacity of a property to perform the function for which it was intended declines, functional obsolescence is present. Functional obsolescence may include such things as changes in the taste in the marketplace, changes in equipment design, materials, or processes. Again, there's no evidence provided by the applicant that this was the cause of functional obsolescence.
Can I ask a quick question for both of you, Laura? This is just so the new board members have an idea of this also. If my sales decrease, if I owned a company, I was in Hollister, my sales decreased, but my personal property remained the same,
Yes.
I would still be charged the tax based upon the
Correct.
personal property, correct?
Yes.
Okay, I just wanted to clarify if that, you understand what I'm saying? B? Yeah, okay, thanks.
Okay. For economic obsolescence to be present, an entire industry must be affected by market forces that are outside their control. There is also no evidence provided to demonstrate that market as a whole was experiencing as such. In addition, it only makes sense that production slowed down once the business decision was made to shut down the Hollister plant. I don't know if this is in his current presentation or the one he previously provided me, but he had stated that the closing of the Hollister plant was a direct result of the newer Yakima plant and its lower unit production costs. I believe he said that
Yes, you
earlier.
did, 20, yeah.
We don't feel that is accurate. The Yakima plant also closed its facility in December of 2020. And it primarily closed due to a loss of a large customer and perhaps a result of poor management decisions. Furthermore, there very well could have been acquisitions or disposals for that matter made during 2017 that are not accounted for due to the non-filing of the 2018 business property statement. The applicant is also unable to provide that information, saying there was no capital expense budget for 2017 since Sunoco knew the plant was going to be closed in 2018. In other words, Sunoco knew they'd be closing this plant immediately following the acquisition. The assessor considered all forms of depreciation, and there is no evidence of additional obsolescence as defined in LTA 2010-30. So again, because there was not a business property statement filed for 2018, which is the year under appeal, the assessor, we did make an estimate and carried over previous values. So upon further review and discussion with the applicant, there are some adjustments that may be warranted, and they're as follows. There was a $20,000 estimate made for possible new acquisitions because we did not know since nothing was filed. I am proposing to remove that. The 10% failure to file penalty must stand per section 463 of the R&T code because it states if any person who is required by law or is requested by the assessor to make an annual property statement fails to file an annual property statement within the time limit specified by section 441, a penalty of 10% of the assessed values of the unreported tangible personal property of that person placed on the current roll should be added to the assessment. So basically the penalty would stand. In review of the assessment, I did find that we were using a commercial 15-year rather than an industrial 15-year
What is
life.
the difference in that, Laura?
I'm sorry, what?
What's the difference in your commercial versus industrial?
It's different tables, and they think that industrial tables do depreciate a little bit faster because
Faster,
they're
yeah.
being used
That's
more,
what I thought. Okay, I just
more
wanted to
than
make sure.
commercial sites.
Thank you, appreciate it.
So by changing that table, it would reduce the assessment by approximately $171,000. On the 2017 business property statement, there was a CIP, which is construction in progress, amount reported of $476,142. That number was just carried over to the next year since nothing was filed and we didn't know any different. The applicant clarified that that was more than likely tooling, so I made that adjustment in the assessment, which would reduce that value to by $119,036.
Okay.
So the assessor's office is proposing a net reduction of $310,210. So in conclusion, I'm asking the board to find the value for the 2018 assessment as follows. The structural improvements would remain the same. Fixtures, 214,005. Personal property, 15,103,594, bringing the total assessed value 16,906,188. And in your exhibits, I just gave you some printouts. It does have the detail of the equipment. It has a before summary from our property tax database, and an after with the totals there. And that concludes my presentation.
Thank you. Tom?
Yes.
Is it all right if he is to speak?
Yes, you can go ahead.
Go ahead, sir.
Terrific.
Thank you,
Board
Tom.
Member Medina, you mentioned moments ago, you asked the assessor if my sales declined, would I still have to pay the same amount of tax? The answer is yes under the cost approach, but if your sales decline, that is a form of what's called external obsolescence. I'd just like to read the definition because I think it's relevant here too. This is from Assessor's Handbook 504. External obsolescence, also known as economic obsolescence, is the loss in value resulting from adverse effects external to the property. This type of depreciation may include loss in value due to inflation, high interest rates, legislation, environmental factors, reduced demand for the product, increased competition, changes in raw materials, and increase in cost of raw materials, labor, and utilities.
But none of that was effective here. It was a change of, it wasn't really a reduce in, or a legislation or cost of materials. It was changing your business model from Hollister to another state because you're taking advantage of the lower cost of labor.
Correct.
So-
And that is, I would definitely,
I mean, I don't see that. I see like if you're talking about legislation, if there was something that affects everything, but what you're doing is you're just using that because it's a wise business decision to move from one state to another to take advantage of that. So I think, you'll reap the rewards in the following years because you are at a less cost per unit from here until eternity, whereas if you stayed in California, you would be paying a higher tax. So I think what I'm trying to say is you'll reap the rewards in the future. And
from that plan, I would agree.
Yeah.
I think what I would say is this functional obsolescence, excess operating cost argument definitely blends into technological obsolescence and economic obsolescence when you're looking at the plant level. For instance, like I just read the definition of external obsolescence. One of the items is increased competition.
Right, but you withdrew your argument for economic obsolescence.
Let's have clarifying questions and then maybe arguments at the end.
that's what we're doing right now, right? That's what we're doing right now, Barbara. I think. Am I correct on that?
I believe so.
Yeah.
Clarifying questions. Yeah, I just didn't want to have an argument between.
It's not an argument. We're just discussion. We never argue.
Discussion
Barbara.
among friends.
He can present, and then we can rebut.
Okay.
Yeah.
Good.
Terrific.
That's fine, Tom. Thank you for being the mediator.
So I think like I said, I think this functional obsolescence argument lends itself towards technological and economic obsolescence. And one of the things that external obsolescence talks about is an increase in competition. If you've got two plants and one of them can produce a lot less than the other plant, then you've got a competitive imbalance. Regardless of whether it's within the same ownership structure, that plant is still outperforming this plant, and that caused the closure. And I think there's an argument to be made that that's still relevant. That's still a form of obsolescence. What we're trying to get to here is obsolescence, whether you want to call it functional obsolescence, whether you want to call it
No,
external obsolescence.
I
Ultimately, this event occurred because of that difference.
yeah, and I understand competition amongst operating companies. This is my opinion.
Yes, sir.
Between two companies that I own is different than from a third party because once again, I'm looking at it a little bit different because I still feel, I have ran plants before and I understand the reasons why
Sure.
we do certain things.
Yes, sir.
And I know even when we go into mergers, acquisitions, or sales, that there is a game of chess, a strategic plan that we have in the future. So that's kind of where I'm having a hard time.
I understand.
And That's just me personally, so it's my opinion, but not as the board, just personally.
Thank you for that. I don't think I have anything else that the assessor would like to.
Do we have anything else, Laura?
Yeah, I just kind of wanted to point out, in reviewing the company's 10K report,
And a 10K report is what?
the, with the Securities and Exchange Commission, for the corporations, they typically, this company buys and, well, I shouldn't say buys and sells, acquires properties. And since even Yakima plant is shut down now. So he's comparing the plant to Hollister as less operating expenses. However, now that plant's closed too. So,
That could have been I mean, I hate to say it, but that could have been a business decision. Like I said, it could have been a lot of different things. I know I want to say one thing for the record, Laura, with all due respect to you, is, you know, we had brought up poor management a little while ago. I would say that's an assumption. You know, poor management, I mean, there are external factors of why companies decide to go a different route. So I would really, I'm not saying strike that, but I'm not listening to the poor management part, but you are correct. You know, there are companies in there that, you know, they have a model and they buy and sell different companies. I'm not sure if this is the company I'm speaking of. I don't even think of it right now. I'm just looking at what we're looking at in front of us, and I know what I'm thinking right now. But is there anything you can say, sir, on that?
In terms of the closure,
Yes, on the Yakima?
I'm aware that it's just declining demand is the issue. They've just had a tough time, and that's just how it's gone.
Okay. Anything else, Laura? Yes, sir.
I'd like to just, I've been listening to this argument.
Yes, sir.
And the issue kind of comes down to they moved to Yakima because of lower operating costs.
Yes.
And that's probably the case. Up in Yakima, you have cheap electricity because you have the
Water.
Columbia River, the Bonneville Dam. Electricity, water is very cheap. Labor is cheap up in Yakima, Eastern Washington. But that affects the total business value. That's a locational adjustment. Under California property tax law, the assessment of personal property and equipment is a separate appraisal unit. A personal property equipment is going to have the same value whether it's in San Francisco or whether it's in Piscinas. To go up and use Yakima that has lower labor costs is not going to affect the value of the equipment. It's the same equipment. The issue is here, what is it in the design of that equipment that makes it less efficient? And therefore, we should apply less, and we should apply extra obsolescence to that equipment. But we don't see it. There's no evidence that the design of that equipment, as defined by functional obsolescence, has any loss of value. It's a locational adjustment that's trying to be made, and that involves real property and business value.
And I concur. I mean, I look at it the same way. So, I mean, I don't know if any of the other board members
Yeah,
have any questions.
I mean, that's, I guess, the crux of the matter that I'm seeing exactly that. You're arguing as the applicant that functional obsolescence matters because of the difference in operating expense between two totally different locations. And I can understand, a business reason for doing what you did, but I don't see how that affects the value of the equipment. In the beginning, you said the equipment itself is really, it sounded to me, not a lot different than the equipment up in Yakima. So I guess I'm having a hard time saying, I mean, I've been in business as well. The equipment is the equipment. Whether it's here or it's in Yakima, that equipment has a value. And I guess I'm having a hard time seeing the argument that the fact that it's obsolete because Yakima's, got lower expenses, I just don't make the connection there.
Yeah, I think a couple things. Again, the gentleman with the assessor mentioned the scrap value. I just looked at cost as assessed as 24.5 million. We're asking for 8 million. That's 33%. That's not 10%. So I just want to get that on the record. But ultimately, this comes down to the competitive landscape of the products being made. I mean, Yakima and Hollister and Exeter, they're all in the same, they all service the same general area. If you've got a plant that is older and it costs more to produce at, you got a newer plant that you just built, costs less to produce there, this older plant is suffering from obsolescence. There's no doubt about it. The State Board of Equalization created that analysis for that point. I mean, if we can't use it in this case, I cannot think of an example where we couldn't use it, because you're never
But then I guess you're just, obviously you're disagreeing with, I'm just hearing the county's argument that is claiming that that does not apply in this case. You're claiming otherwise. Maybe I can hear more about, why you feel differently than they, there's two different opinions about that. I guess that's what it's coming down to. You're saying this should be applied, and county's saying, no, it doesn't apply in this case.
Well, I think it comes down to this. If you were the owner of the Hollister plant and the Yakima plant was a competitor and they were able to produce their product at, I think it's like 29% less, would you be able to stay in business if they're servicing your same client base? They're going to be able to take your business away.
Right, but
Loss of business is a form of
right,
obsolescence.
but there's a difference in business there, not because of the equipment, but because of the difference in operating the plant in Yakima versus Hollister. It has nothing to do with equipment.
Yeah, I would say that the calculation is a functional obsolescence calculation, but it definitely bleeds into technological and economic obsolescence. This is why we withdrew our economic obsolescence argument, because we took some time and we looked at really what was happening, and we said, okay, if we were to present the excess operating cost analysis with the in-utility formula, which is, I'm sure you guys have dealt with that before, that's a wholly external obsolescence analysis. We don't want to double dip, so we dropped the economic obsolescence portion of this adjustment and simply said, look, this bleeds into all three types of obsolescence. It's functional, it's technological, and it's economic. It's technological because the layout of the Yakima plant has a better design. It's newer. It's got it just costs less to operate. It's functional in that the functionality, machinery can be the same. They may have different layout and things like that. And then it's external, where you've got a plant that's producing the same thing that you are, but the inputs are less, and that's clearly delineated.
No, I understand all that,
Yes, sir.
but I guess what would be again, you're arguing that this functional obsolescence applies in this case to the equipment, and the county's arguing that it does not. And maybe, county, you can further respond to the reason why it does not apply, although you've already made your point, I believe.
Well, I think the point is that it has not been proven that the excess operating cost is due to the machinery itself.
Right. Correct. But his argument is that this exception should be applied in this case. The functional obsolescence should be applied due to other factors, and you're saying it should not. It should go back to looking at the equipment itself.
You have to look at the equipment itself.
Right.
With a separate appraisal under California property tax law. So you don't mix it up with the total property. So we have, and this LTA that was designed by the state separates those different forms of functional obsolescence. And it gives us a technique to focus on each form of obsolescence. And given the information we have, and based on our visits to the plant, we don't see that it's functional obsolescence due to the equipment.
In his argument that it's the equipment is not the issue here, you don't agree with, basically, because he's pointing out in the beginning there's this exception that he's using obsolescence that he's driven by other factors other than the equipment itself, and you would not agree with that.
Well, the
Can you please speak into the mic? Can you please speak into the mic, sir? Sorry.
Oh, excuse me. The basis of this appeal is focusing on obsolescence due to functional obsolescence. So that's what the focus of this is. Economic obsolescence due to external factors, that's another argument.
Yes.
And he's already conceded that we're not going to argue that. And he wants to mix them up now. But the state board letter that we're following separates them very clearly and distinctly. And that is the job of the appraiser to do that.
Okay, thank you.
May I ask?
Just one thing, just for clarity, I think for everyone is, the way I look at it, and I can be completely wrong, I'm not an expert, if, let's call them clamshells, because that's what I'm used to calling them. If clamshells went away and there's no more sales whatsoever, then I would feel, yes, I would agree with you, because there is no machine use for that product. But clamshells did not go away. They're still readily available, and the demand is there. So that's kind of how I'm basing my decision. I can be, wrong on that, but I'm just saying that's kind of what I look at.
Well, and the fact that, as was argued, the much of this equipment is being used
Yes.
still.
Yes. B, sorry about that.
If I could follow up just really briefly on what Eric just said, I would just point out that the section of that letter that he copied in his exhibits pertains to the economic obsolescence argument, which he's no longer making. So that part of the LTA that he keeps citing to is supportive of the economic obsolescence analysis, not the functional obsolescence analysis.
I think that what I would say is, and this has been something that's been discussed at other assessors' office, this functional obsolescence due to excess operating cost, it's not solely functional obsolescence. It can be created by external obsolescence. So you could have a situation where demand for your product drops, so your cost to manufacture goes up. You can have a situation where a new plant gets built and its costs are less, so that's a competitive advantage. It's putting your plants out of business, and that would be considered external obsolescence. So we're using a functional obsolescence formula, but we're suggesting that it's probably more economic obsolescence in nature. I think, honestly, I think it's all three. I think there's some technological obsolescence, I think there's some functional obsolescence, and I think there's some economic obsolescence. All at work here. That's causing the closure of the plant.
Yes, okay, so I'm listening to what you're saying, and forgive my ignorance, but this is the first time I've been exposed to this. I don't own a business, but I do understand that when you acquire property, there's personal property that's attached to the business. And so when you first presented and you gave us the Exhibit B, I immediately asked myself, well, is there some sort of salvage value to the existing equipment? Whether it moved to Yakima, Exeter, or stayed here in Hollister, whether it's in storage, there's an existing value to the personal property, correct?
Yes, ma'am. Generally speaking, and I wouldn't want to speak for the assessor, but in my experience, salvage value is usually 5 to 10% of the total cost.
Okay.
Our total cost here is $24.5 million. We're asking the board to enroll, I think, $8 million, so that's 35% of that cost.
Okay.
So we're not asking for scrap value, and we do acknowledge that there is going to be some value to that equipment that was transferred over, but it goes back, the whole thing goes back to a manufacturing line is a very...
I understand that, and you didn't let me finish.
Oh, I apologize.
And so the equipment that you have is not compatible with the stock that you have.
It's not, it's hard for me to say that because there's a lot of components.
Okay.
And so it's hard for me to make
And I understand what you're saying, but again, there is personal property that by law has to be taxed, has to have an assessed value, and operator of a business has to pay for that property, right? The personal property. It's just a given. So I guess maybe my next question is, why wasn't there a business statement filed in 2018 that may have described the diminution of value, the obsolete nature of what happened to the personal property, or the disposal thereof, that might have not created the situation that we're in right now?
My understanding is that with the plant closing several months after the deadline, there was just it just became a kind of a mess, and certain people had left. and the person that was responsible for filing that filing just wasn't there anymore, and it just got missed. It's
Okay. We'll bring it back to the board. Any other questions?
I'm sorry, Mr. Chair. Can we clarify that there's no more questions from either party to any of the other party, that we've done all the questions that the assessor, does the assessor have any additional questions?
Not a question, just a comment.
Well, let's do the arguments, I mean,
Can I make
the
a quick-
rebuttal
Can I make
later?
a quick comment? Not a rebuttal, but just a quick comment.
Yes, you can.
Okay. So, they bought the facility in 2017. Our assessment is as of January 1st, 2018. Then they closed the plant towards the end of 2018. I think they had plenty of time to file a property statement. Not only that, they had multiple locations, and, I'm not sure if they filed at the other locations or not, but, I believe they bought this facility, was it March of 2017? Is that correct? So that's plenty of time to file a property statement, but no call was made to us. They did not reach out to us so we could look at it and go out, physically look at it at that time. I just wanted to make that comment.
Okay. So the assessors, you have all you have all your questions in, and you've also, you don't have any additional rebuttal evidence to present?
Unless staff has anything? Nope.
Nope.
So we're
Okay.
good.
For the applicant, do you have any additional questions or any rebuttal evidence that you'd like to present?
no, ma'am. I think we've covered it.
Okay,
Okay.
so then we'll move to closing arguments by each party.
Okay. Closing arguments, you have anything?
Go first. So I
That's
go
what I'm
first?
saying.
Oh, thank you,
That's-
ma'am.
yeah, that's- I was looking right at him, sorry, Shirley.
Well, board members, first, thank you for your time. I really appreciate it. I know it's a strange time to be doing this, but I really appreciate it, and the taxpayer appreciates your consideration here. Ultimately, I think the case comes down to the fact that this plant closed because of the difference in production, and that is a form of obsolescence that needs to be addressed. Whether you want to call it functional, economic, or technical or technological, it's still obsolescence. You're still trying to come up with a number that's affected, that represents the loss in value due to this difference in production cost. The assessor, points to the functional obsolescence and says, well, it's functional obsolescence and it's not related to the machinery. I think that misses the point. I think the assessors, with respect, is asking the board to ignore the forest, the closing, the difference in cost, production cost, all those things, and focus on, look, this is technically defined as functional obsolescence. This formula is technically functional obsolescence, but so we shouldn't really allow it to be used for other forms of obsolescence. But I think it's the most relevant calculation because it is the reason why the plant closed. With that, I would ask the board to enroll a value of $7.9 million for personal property and fixtures, and thank you all.
Thank you, sir. Staff?
We feel we've already given our closing argument.
Wait, she's the DA. I can't take her on.
Shirley Murphy, Deputy County Counsel, appearing on behalf of the assessor. The assessor is entitled to the presumption that they have regularly and correctly assessed the property for taxation and properly performed their duties pursuant to Evidence Code Section 664 and Property Tax Rule 321A. Therefore, the taxpayer has the burden to establish by a preponderance of the evidence that the value on the assessment roll is not correct by presenting independent evidence relevant to the full value of the property. Even if they were to show the assessor's value is wrong, the assessor's presumption of correctness is not rebutted if they do not provide evidence of the correct value, according to Property Tax Rule 321A. This has already kind of been drawn out, but I just, for the record, want to clarify that the application itself requested reduced values for three things: the improvement/structures, the fixtures, and personal property. according to the presentation today, and as discussed previously with the assessor's office, the taxpayer is not arguing reduction on, is no longer arguing or requesting a reduction for the improvement / structures or fixtures. However, that has not been formally withdrawn. In the assessor's presentation, Assistant Assessor Nacarado did indicate that she had taken a clean look at that calculation, and she has suggested a reduction in the opinion of value to $214,005 for the fixtures, but no reduction on the improvement / structures. Therefore, since that hasn't formally been withdrawn, we would want to make sure that the board, but no evidence has been presented by the taxpayer. We would ask that the board formally find that the taxpayer failed to meet their burden of proof on those two issues and uphold the assessor's opinion of value as orally revised and in her written presentation today. The personal property is the crux of the issue, and there was previously in communications between the taxpayer's representative and the assessor's office, there was an argument of both economic obsolescence and functional obsolescence. Now that has been sort of winnowed down to just the functional obsolescence argument. Since no annual statement was filed for 2018, which is required by Revenue and Taxation Code Section 441A, the assessor did make some assumptions regarding the assets based on previous year's statements. And she has, of course, taken some, in further discussions with the taxpayer's representative, has recommended further adjustments to that calculation to be reduced to $15,103,594. So the assessor did request information to establish the taxpayer's opinion of value pursuant to Revenue and Taxation Code 441D in January and March, and then there were also intervening emails between the two. Some but not all of the requested information was provided. The assessor did some independent research and discovered some evidence based on the records in the Tulare County Assessor's files. So we would argue that based on the application of the methodologies in the assessor's manual, which, by the way, the assessor's manual is, there are 28 sections. This chunk right here is only section 504, and it's about 260 pages. That's the section for assessment of personal property and fixtures. There's the section 581, which I would say is probably around maybe 40 or 50 pages. That is the equipment and fixtures index, percent good, and valuation factors. And then there are the additional letters to assessors, which have been discussed by both the taxpayer's rep and by Ms. Nacarado. The assessor, in their professional training and judgment, have to be familiar with all of these methodologies and tables and whatnot that are in these sections, as well as the other, I guess, 26. And they apply them according to standardized processes set forth by the State Board of Equalization. And we would argue that the taxpayer has not provided sufficient independent evidence to establish to rebut the presumption that the assessor has regularly and correctly assessed the property for taxation and properly performed their duties pursuant to the evidence code and property tax rules cited, and that the taxpayer has not established by independent evidence not only that they applied all of these rules incorrectly, but that they also have not provided independent evidence that is adequate for the reasons that have been discussed by Eric and Laura, and also in some of the questions
Wait.
that your board members have asked.
Okay, thank you.
Regarding the locational versus the inherent qualities of the equipment itself. And therefore, would argue that they have failed to meet their burden of proof, and that we would ask the board to uphold the assessor's opinion of value as modified today to the value of the fixtures and the personal property for a total revised opinion of value of $16,906,188.
Thank you very much. We'll bring it to the board. Board members? Yes, Barbara?
You have the right to deliberate in private.
I don't think we need to. Sorry. What's the wish of the board right now?
Mr. Chair, I'll make a motion that we uphold the revised assessed value for the county of $16,906,188.
Do we have a second?
Second.
All in favor?
Aye.
Aye.
Peter, are you there?
Nay.
Nay? That's 4-1. Motion passes.
Yes, 4-1 with Supervisor Hernandez.
Yes, Supervisor Hernandez with a nay. Thank you very much.
Thank you, board members. I appreciate your time.
Can I have a motion for adjournment?
I'll make that motion.
Thank you.
Second it.
Oh, sorry.
All in favor?
Favor, aye.
Aye.
Ahead of myself.
Aye.
Thank you, Peter. I heard you, aye.
One more time. John Hancock.
Okay.